Ministry of Earth Sciences in India. There are predictions for a weak El Nino though. During El Nino years, the monsoon is usually weak, though there have been many years, El Nino years that is, when there was no drought or effect on a normal monsoon. But a clearer picture is expected only in the month of April. That is when the IMD will issue its first monsoon forecast as well. The IMD in the recent days has said that there is a probability of an El Nino, but they also say that a clearer picture would only come in later. That, of course, is a view from IMD, but there have been recent reports from the World Meteorological Organization which says that there is a 50 to 60% chance of an El Nino by the month of May. And there are similar reports from Australia, US and Japan Agency for Marine and Earth Sciences, which have put the probability of a developing El Nino anywhere between 50% to 70% on the higher side. US actually goes on to say that there's an 80% chance of an El Nino in the months of March to May. Let's get in then Mr. G.P. Sharma, who's President Meteorology and Climate Change SkyMet. He now joins us on the show with his sense on the climate changes in the year to come. Mr. Sharma, hi, thank you so much for joining us. What is your sense? What is the El Nino probability right now, and what is the impact that you are expecting on the Indian monsoon for 2019?
See, El Nino probability is on the rise now, okay? The earlier projection which we had, yes, it was reaching a peak in the month of December and early January, and thereafter the projections were it is likely to decline, and it did decline also. But then from the last week of February and almost entire March so far, it is on the rise. It is as much as it was earlier in the month of December. The temperatures from the average anomalies, it is 1 degree plus in the Nino 3.4 region where we have the El Nino. So it is a growing concern. It is rising, and then the projections are it is likely to remain so at least say for the summer months, and even at the commencement of the monsoon it's not going to drop rapidly. It's going to remain. That's our view. Yes, please.
So, Mr. Sharma, if we go by that, would you say that the Indian monsoon this time around could be not just delayed but deficient as well?
See, normally El Nino is linked with the poor performance of the monsoon. 80% of the cases are like that, and actually 60% out of them they go to even droughts also. The only difference this time is this is a evolving El Nino. Normally the evolving El Ninos they are more punishing in terms of the monsoon rain. The evolving one they could be a little soft, but then definitely there is a chance that they could lead to below normal monsoon. And then since the El Nino conditions are there quite significantly, and they will remain till the onset of monsoon at least, so the start is going to be a little slow. That's our view. Month of June it's going to be slow, and then possibly it's going to even spill over to the month of July also. The situation possibly may recover a little in the second half of the monsoon. That's it.
Mr. Sharma, that would be a bit of a concern, won't it? Because the last year, 2018, that is, also was almost a deficient monsoon. How concerned should India be then, especially with an El Nino developing?
See, we haven't seen a good monsoon for the last at least about 5 years. We haven't seen. 2 back-to-back droughts were there. The best of it which we saw, that was 2016, when also ended at 97%, just about making it to the normal. Okay, we are possibly in this cycle of monsoon where is one after the other it's performing poorly, and it happens earlier also. Such cycles have been there. So in spite of the better conditions at times, like in 2016, we didn't achieve much in terms of monsoon rains. And this time, in any case, the conditions are indicating that Pacific is warming. It's warming continuously, and then there are no signs of cooling. Subsurface temperature of the ocean, which also hold the key, it is sufficiently warm, right up to 150-200 meters the depth of the ocean. It is warm over the Nino region. So it's not a good sign. I will say it is nowhere relenting at the moment, and we got to go with a caution that the monsoon rains to start with in the first half of the season, they may not be performing as we like to have it.
Mr. Sharma, as IMD also says that these are still early days, they would want to come in by the first week of April or second week of April with a sense on where the El Nino really stands. What are the chances that we actually might see a weak El Nino? As IMD also says that it's a very borderline El Nino right now. And if the El Nino weakens, we might have a good monsoon or, of course, the otherwise then.
As we see it now, it's easing out only in the second half of the monsoon. The probability at the moment, which stands at about 80% or even more, it's dropping, yes, but at the commencement of the monsoon, it still remains about 60%, which is fairly high. And then thereafter also, the decline is not very sharp. It's a very, very gradual, and all through the monsoon months, it's promising at the moment to remain at about 50% or so, which is quite significant. Yes, the declining probabilities possibly dictate that the scenario may become a little better in the second half, but nowhere it is not likely that we are going to have some bountiful rains all through the monsoon season, having even above normal or even closer to the normal or so. Looks like they are going to drop, and then we're likely to have below normal rains during the monsoon season.
So I actually want to go back to the last year yet again, and while it was a deficient monsoon, and we did see floods in Karnataka and Kerala, and we did see deficient monsoon in much part of Western India, whether it was Maharashtra or whether it was Bihar or West Bengal on the other side, Gujarat on this side. So if we are talking about an El Nino this time around, what is your sense? Will these geographies yet be severely hit again? So in an El Nino year, what part of India really gets impacted?
See, once we give our forecast, as we said in the first week of April, most likely around 3rd of April, we give the forecast. We are still working out as to where are the pockets which are at risk, which will have more risk. To say the least, you see, the monsoon basically are governed mostly by the rainfall over along the Western Ghats and Northeast India. Major portion of the monsoon rainfall contribution that comes from these two pockets. If they perform poorly, obviously it goes down terribly. And the interior parts also, they have the key, like particularly the rain-fed regions, they have more concern. The central parts of the country, which includes entire Maharashtra, parts of even Madhya Pradesh, entire Madhya Pradesh and parts of Rajasthan, these are the rain-fed areas, purely depending on the monsoon rains or so. So though their averages are not very high, but then surely in case the monsoon performs poorly, those are the most affected areas.
All right, Mr. Sharma, we'll let you go at that. So that is the view coming in from SkyMet. Still early days, but the probability of an El Nino is higher. If that happens, then we are looking at a deficient, delayed monsoon, and the recovery for the monsoons would only come in the second half, and that doesn't really sound very good for the Indian economy, for the crops, agriculture, and overall country. So that is something that we will need to, of course, keep an eye on. But moving on, let's talk about the cotton prices now, which have been very, very volatile. Remember, we have seen the prices surge on a weak crop estimate, lower carry-forward stock, strong global and domestic demand. This time around, we are looking at the Indian cotton crop by 10 to 12% on the lower side. And that is one reason that we have seen the prices surge. We are looking at a crop estimate between 32.5 to 32.8 million bales, while the consumption is seen at around 32 million bales. The last year's crop was 36.5, and we can clearly see a lower crop, a lower carry forward, and that clearly has been taking the prices very, very volatile. Joining us now to talk more about that is Mr. Atul Ganatra, who's President, Cotton Association of India. Mr. Ganatra, hi, thank you so much for your time. We have seen huge volatility in case of cotton prices. We also have seen a crop being lower, but the Cotton Corporation of India now starting to sell its procured cotton in the open market. How much of that impact do you see coming in for prices?
Yeah, you see, first of all, Manisha, the Cotton Corporation of India has this year purchased so far around 12 lakh bales of raw cotton on MSP prices, and they have started the sale, but that is not a pressure on the market because CCI has started selling the bales, because CCI prices are very high compared to market. Today CCI price for 30 mm cotton is 47,000 rupees compared to market rate is 45,500 to 46,000 rupees. So still the CCI rate is above the market.
So what is your association numbers when it comes to crop output? Because we've seen various associations come with their numbers, the government has its own numbers. And how much are you depending on the carry forward stock to ensure that the demand is met in India?
No, accordingly to the Cotton Association of India, the carry forward stock of the last year 30th September is 28 lakh bales, which is not enough. And this year we are having, compared to last year, crop of 365 lakh bales. Our last crop estimation is 328 lakh bales. And we have meeting on 5th April for the, we are going to again, we have to take the new figures and check what is the, as on today, crop conditions again.
Also, what is the exports picture according to you? Because as I read the numbers, nearly 50% of the export targets have been achieved already. What is your sense? How are the global markets buying? How is the rest of the season looking? Also, the US and China trade talks, because China is a country or a destination that India has been exporting to quite strong. How do the international, global trade concerns impact this industry as of now?
Yeah, our export target as per Cotton Association of India is 50 lakh bales this year compared to last year 69 lakh bales. And by March 31st, we believe the shipment of cotton will be over by near about 38 to 40 lakh bales. And the pending will be 10 lakh bales export, for which we have 6 months time. So target of 50 lakh bales looks very easy to achievable. And regarding global market, it is everything is depend on how the settlement is taking place between China and USA cotton. And if the settlement takes place, then prices, New York prices also looks like going up in coming months.
Mr. Ganatra, with the kind of crop estimates that we are talking about, we already have seen a reaction come in for prices. The last couple of weeks, the prices have surged quite strongly. What is your sense going forward from here? How would you want to estimate price movement?
You see, Manisha, we were having international conference in Trident, Mumbai from 6th to 8th March. And that time, at the time of conference, Indian price was around 41,500 spot. And in the conference, in my crop report, I have very clearly told that at this price, 41,500 spot, Indian cotton is the cheapest cotton available in the world. And I have recommended Indian spinning mills should buy the cotton at this price. And you see, our conference got over, and within 2 weeks the market today has gone up 3,000 to 3,500, and today 29 mm good quality cotton rate is 45,000 rupees. So within 2 weeks 3,500 rupees Indian market has gone up. And the reason for market has gone up, there is a concern about the smaller crop. India this year is having 10 to 12% smaller crop than last year. And not only this year, we are facing the problem is, before 5 years we have reached to 400 lakh bales production, but thereafter our Indian crop is getting reduced year by year. And this year we are having the last 10 years lowest crop. 2009 we were having lowest crop of 325 lakh bales, and we may be same by this year. So there is a concern about Indian crop is getting reduced.
Sure. So, as is always seen when the prices are moving so volatile and are expected to go higher, we do see stock holdings happen with farmers, with stockists. What is your sense on the textile buying right now? Is the industry buying? Is the industry also holding stock in anticipation of prices running higher from here?
Yeah. Textile, as on today, Indian textile mills are having around 45 to 50 days stock inside the mill. They are having inventory of 45 days stock. Same time, Ginners, Cotton Corporation of India, MNC and others, they are having 45 lakh bale stock. So total stock India is having as on today 90 lakh bales, which is 50% is inside the spinning mill and 50% are physical stock in the market.
So, Mr. Ganatra, if you work with the numbers that you've thrown in, if we are looking at a lower crop and a lower carry forward stocks and demand continues to be on the stronger side, the farmers are still holding the crop, how much will India then need to import? How much is the dependence on the importing numbers right now?
This year our import target is 27 lakh bales compared to last year's 15 lakh bales. We are thinking there will be a huge shortage in India after July, August. And the only thing mills to run with cotton will be they have to import the cotton and run the mill, because our balance sheet is very, very tight.
All right. So, Mr. Ganatra, final question then. What is your sense going forward on the prices? How much more move on the upside in what months? As we see arrivals continue to decline, it's below 1 lakh bales right now. So, how much of a price move are you expecting from here?
Yes, definitely price will start going up again after 15th of May, when the arrivals will slow down very much. Even today, one of the reason price to go up was arrivals, because last year by the same time 25th March the arrivals were 1.30 to 1.35 lakh bales, but today last 2 weeks arrivals have come down to 80 to 90,000 bales only, which is again there is a fear of whether we will reach 325 lakh bales crop size, or even it will be narrowed down, it will be further down. That is the also fear in the market.
All right, Mr. Ganatra, we'll let you go at that. So that is the view coming in from the cotton prices. We have seen one-year lows and one-year highs in case of cotton prices in last few months itself. So the volatility is expected to be there, and the prices only will have one way, and that is north, is the view coming in from the industry. Well, the crude oil prices are headed for the best quarter since 2009. It also is headed for best first quarter since 2002. The crude prices not only have outperformed in the commodity as an asset class, but overall asset classes as well, where nothing else in this quarter has given you high returns as high as crude, with Brent prices up 24% and the US crude is now up by 30% in this year. And that's not all. If you look at the other commodities, we have seen similar gains come in. Nickel is up 22%, palladium is up 18%, and other metals and precious metals also have done quite well. Joining us then to talk about more on that is Abhishek Bansal, who is chairman at Aban's group of companies. Abhishek, hi, good to have you. Starting with the crude oil prices first, and what a performance where even as we are looking at the global recession concerns, slowdown concerns, US is producing crude at record highs, exporting crude at record highs as well. The Brent crude prices are ending as the best performer across asset classes. What is your sense on the quarter forward now?
Yeah, crude oil has gained quite amount in the last month or so. Basically, one of the reasons may be that we are seeing some positive headwinds on the US-China conflict, that was trade war that was going on. So we are seeing some positive headwinds on the US-China trade war. Also, OPEC has been playing quite a positive role in supporting the prices near about $70 per barrel. So we don't see a downward headwinds on the crude oil prices in the near future. The crude oil prices should be firmly on the positive side and should be remaining firm at these levels.
Okay, so while we have seen the crude price range at $15 per barrel for the first quarter, do you see that stretching? Do you see the Brent prices moving up and beyond $70 per barrel for the second quarter?
Yeah, I think so. The crude oil prices will be range bound with a positive bias, with a bias towards the upward direction. But don't see that the crude oil prices will be, going out of the reach, because there are growing concerns of economic slowdown in the US, so which will impact the demand from the US of the crude oil. But at the same time, we see OPEC taking steps to make sure that the crude oil prices remain firm between $60 to $70 per barrel, and also positive headwinds between the US-China trade dialogues.
Sure. Also, Abhishek, as we get into the next quarter, the month of April itself is going to throw a lot of things. The US and China trade talks for one, a lot of macro data that is still expected, especially for metals then. Do you see demand supply numbers actually ruling it higher, or is it going to be all about the macro sentiment and macro data that will continue to impact the prices?
Yeah, on the base metal front, it's quite a mix of fundamental micro views, macroeconomic data, as well as the supply-demand data, as well as the trade conflict going on between US and China. But one thing which will result in increased demand of base metals from China is the reduction of the VAT on base metals in China. The VAT has been decreased from 16% on the base metals to 13%, and that will be applicable from 1st of April. This should give rise to increased demand from China for all the base metals. Also, coupled with it, copper and zinc, they are running very low inventories in LME. For example, on zinc, we are at the 12-year lowest inventory on the LME. Coupled with an increased demand in China because of reduced VAT. Nickel, again, there is the EV, electric vehicle story behind it. Copper again remains in a deficit environment because there is no new supplies coming out in the next year or so, and we would be seeing increased demand coming out of China because of reduced VAT. So, but at the same time, we are again having concerns of US economic slowdown, which we could see from the Fed statement. It was much more dovish. That's why the gold prices rallied. And so that could be one of the concerns where the prices should go down because of the US slowdown. But otherwise, as for the fundamental view looks to be, the base metal looks very strong, especially zinc and copper.
Sure. One word on the gold and silver prices before we let you go. While the gold prices are closing this quarter up by nearly 3%, we have seen the silver prices decline 2% in the same time. What is your sense going forward? Is it going to be about other commodities, equities, or do you see some money flowing in the precious metals, especially gold?
I think so. Fundamentally, gold is still very much undervalued, and within a span of maybe a year or so, we could probably see a price level of nearly $1,400 per ton on gold. Considering the amount of paper that has been printed in the world economy since the global economic crisis from 2008, I still believe gold has not appreciated enough to replicate that printing of money. So at $1,300, still gold looks undervalued, and we could see the prices going up to $1,400 in the next year or so.
All right. So not such a big fan of gold, but precious metals, rather metals and crude prices will continue to do well as we get into the new quarter. Abhishek, thank you so much for joining us. And that's all the time that we have in Commodity Champions. Thank you for watching.